Fire away, sir. It's all yours.
Yeah, hi everyone. Good morning. Happy Thursday. Cool. One more day to go for the weekend. That's good, isn't it?
I has already started, Marsh.
Yeah, I know. I felt, I don't know. Today, honestly, I thought it was Friday. Yeah, but then I had to sort of work my one day backwards, saying Thursday. All right, guys, just a heads up in case if you don't know how to submit an asset finance inquiry to Toolbox, I can show that as well. That's pretty easy. I've done a few times for some of the brokers. It's pretty good. I mean, it's all good stuff. You know, what I do, I think one of the things, I don't know what you guys do. Whenever I sort of get an approval, I send them saying, hey, congratulations, your loan is approved, blah, blah, blah. And I just put a little note saying, you know what, we also do asset finance, personal car loans. If you want to recommend or if you're looking for yourself, I'm the man to sort of have a chat with. That works. I've got a couple of people say, hey, want to buy a car? Now we've sorted the car loan. So just the heads up, guys. All right, cool. I'm going to share my screen if that's okay. And let me just pop myself into this. Okay, so which screen I should be sharing? That's the one. Let me know if you guys can see my screen. Is that visible, everyone? Are you guys able to see my screen?
Yes.
Beautiful, beautiful. All righty, so just a scenario that I did for the client that I kind of, you know, did a little bit of workshopping with some of the BDMs and so on. So, I mean, as you know, obviously bridging, no brainer. It's just that someone wants to sell and buy a new property and they kind of have a shortfall of funds if they want to buy the new property prior to their existing property being, being settled and them getting the entire chunk of money, whatever the balance minus you settle your loans. So just pretty much, did a calculation for my client. So their own property was 900,000, which was obviously being advertised in the market. They've had a current debt of 585. So that's an LVR of about 65. All right, pretty straightforward. And then obviously they're left with about 315K, which is about 35% of their target sort of selling price, guys. I've looked at probably about a 2% selling cost, but lenders would want to look at 3%. When you speak to them, obviously they say put it as 3. So minus selling cost, obviously I've arrived at 295. Then eventually client said to me, look, Marsh, out of that 295, we would want to use around 240 for the new purchase, which is basically the shortfall or the bridging loan amount or the amount that they need to buy the new property prior to settling their existing owner property. And of course, they're with a balance of about 55 grand at the end of that transaction. I guess if this works before, obviously you don't need bridging, assuming that they want to go ahead, they've found a property and they assume the new property they would want to settle in prior to the current existing property is being settled. Obviously, then there is a shortfall here, right? I reckon this is clear to everyone. We all do this day in and day out. So let's look at the new property scenario, everyone. The contracted price of new property, 1510, 1,510,000. And then obviously they want to go at 80% because they want to avoid paying LMI for the new purchase. So obviously worked out the loan at 1208, which is obviously again 80% of the property value. Worked out the stamp duty. Obviously, it's just the Toolbox straightforward calculation. The transfer fees, put about 2,200 for other fees and stuff like that. So roughly we've arrived at a calculation of about 1.598, roughly. Yep. Then client said to me, look, Marsh, we got 151,000 saved up for this purpose. So you got 151 there. Obviously, funds coming from the sale of the property is that 240. I put that in here. And just to summarize the loan amount from, obviously I got this loan from HSBC for the client, and obviously you total that up. So you're basically looking at covering your total cost of 1598967, just rounding up to 1599. Now that's the perfect scenario if you don't have to go for bridging. Now let's assume, like I said, it's definitely a bridging, and client said, look, let's try and sort this out through a bridging loan. So the first thing, guys, what you need to remember, if you're talking about bridging, you need to tell the client you got to get your existing property also into the lender who's going to say yes to bridging. Plus, this loan also has to be with the same lender. So you wouldn't find a lender that will do a bridging loan just in isolation, even if you write the new loan with that lender. So they'll say, look, you got to have this property also refinanced back to us. We got to hold both the properties, both the securities for them in order to write a bridging loan. So that's a thumb rule. So you have to basically say that to the client at start. That'll probably then leave them with a little bit of food for thought if they really want to go for bridging, or they could find temporary accommodation, or they could pretty much match the timeline so that they settle the first one and then go in for the second purchase, whatever the way it is. All right, so that's the first sort of thumb rule. You got to be prepared to transfer your existing property. Then again, questions like, is it a fixed loan? Obviously, how much a break cost, all of that again is another conversation that you probably want to table with the clients. Any questions up to this point, guys? Sounds pretty straightforward, I reckon. Yeah, all good? Beautiful. Alrighty. So the next thing, obviously, we need to look at what's the total asset value. So obviously that's 900,000 plus 1.510 mil. That's basically, so clients has a total asset value of both the properties put together. 2410 mil, 2,410,000. Then the total debts, obviously 585 plus 1208, except the bridging amount there. So that's what we're looking at. Then obviously, just to summarize, I've just put the bridging amount here. Now, different lenders, guys, do this differently. I will show you how Bank of Melbourne does the calculation, which I found is pretty straightforward. I also did workshop this with Aussie Elevate, Latrobe, and a few others. But I mean, I think just for the interest of time, I'll show you how to do the Bank of Melbourne calculator. Pretty much the concept is the same, but it's just that sometimes they sort of, look at different values in different areas. All right, so a couple of things, guys. The lenders would basically ask you, if you speak to their BDMs and so on, a little bit of jargon. So they'll ask, what's the start debt, the peak debt, and the end debt. They're a bit confusing at times. So I just want to simplify it. Start debt is the existing debt and the new property value, right? So that means in this scenario, it's 585 plus 1510. So if I click here, obviously I pick those two cells, B3 and B11 there respectively. So the start debt of the client. Now, if you want to have a conversation with the BDM, these are the numbers that you need to have. Obviously, start debt. Now, the peak and the end debt is calculated through their calculators. So do not try to do it through standard Excel, because the way they kind of look at different parameters and percentages vary from lender to lender. Best is, if you think you want to go with lender A, B, or C, for instance, I guess it's a decision where you want to position the purchase loan, and then you actually jump into that lender's bridging calculator and then start populating the numbers is the best foot forward. That'll save you heaps of time rather than you having to shop around and, like what happened to me, I've had to pretty much go below to post in terms of trying to get this sorted out. Yeah, cool. So any questions, guys? Anything at all? Sounds pretty straightforward, I reckon. Yep, cool. Feel free to, probably will open up at the end once I sort of wrap this up. All right, so I'm just going to get the Bank of Melbourne. So they call this a relocation calculator. All right. So this is how it looks. Let me just. It looks a little bit confusing when you look at it for the first time, but don't worry, it's pretty straightforward. So usually you need to decide whether you want to work on the end debt or basically, are you looking at the end debt or whether you're going without, are you not looking at the end debt or you're going at the end debt? So what I was recommended is to look at the end debt scenario. So I went on that basis. That's why I just put a yes there. Yeah, so these are pretty straightforward stuff. Now, when you take the latest relocation calculator, they call it, it'll have its own interest rate mentioned here. And they give you a term of 12 months. If you want, you can actually change it for 6 months as well. But usually what they recommend is go for 12 months, but client can, if the property gets settled, they can pay off whatever the bridging component of the loan and get themselves sorted out. Now, what you need to fill in, everyone, is just this the sort of gray cells are the ones that you need to populate numbers, and everything else is going to come automatically. And what you'll be really looking out is for these two boxes here, the peak debt and the end debt LVRs. Now, if they go over 80, that's actually pretty much like a no deal scenario because client would be paying a massive LMI fee for that bridging loan, which is kind of impractical for a client. Let's say in my scenario where the deal actually didn't go through at the end, there was like something like 50,000 plus LMI, because obviously the both the peak and the end debt went over 80%. So that was basically it. Client said, "Oh no, look, Marsh, we'll try and sort out ourselves. We'll go with the purchase, keep that loan as is, and thanks for your help, mate." And all good. Yeah, but it's a good learning. All right, so let's look at the existing home debt now, guys. If you look at, if you kind of recall, the existing home debt was 585. So I just put it in green so that these are the things that I'll be needing in terms of populating the Bank of Melbourne calculator. All right, so I've got a current debt, which is 585. All right, I'm just going to pop that in. Yeah.
Hey, Marsh, can I just pause you for a minute? Andrew's got a question in the chat.
Yep.
Do you mean the deal won't work if the LVR is above 80 or it's the client's choice?
Yeah, so if you read, yeah, no, that's a good one. That's a good one. So if you look at the scenarios here, for loans with no end debt, maximum LVR is 80%, provided no policy exceptions. Yeah, so the lenders do have policies. If you are going a specific percentage of LVR, they won't accept it. So it's a yes and no. But of course, you do have a scenario where loans with end debt maximum LVR is 90% owner occupied only and provide no policy exception. So you can go up to 90% with end debt, but of course, then there is that LMI component comes in. Yeah, so that's a choice. Obviously, it's a customer's choice. You're in a good position if it's below 80, but if you go over 80, maximum up to 90%, of course, with the LMI fee is applicable.
I suppose the and look, correct me if I'm wrong, Marsh, the hesitation also is, given those large loan amounts, the percentage of LMI is just insane in terms of, 50,
absolutely,
60 grand.
yeah, that's right. That's absolutely.
So, Andrew, to answer your question, it is the client's choice. If they choose to pay 50 or 60 grand LMI, more power to them. But obviously needs to be within the parameters of whatever respective bank that you've gone to as well.
You can't have it over 90%. So
yeah,
better if you're below 80, but 80 to 90 is the max. But yes, client have a choice if they're going 80, but if they're still below 90, you'd obviously tell them, look, this is the LVR. If you're happy, I can pretty much, push the application through.
Does that answer your question, Andrew? I don't know if you give me a thumbs up or a yes or no through the chat. Yep, cool. Excellent.
Yeah, beautiful.
Beautiful. Let's
All right.
keep tracking. Thanks, Marsh.
Yeah, awesome. Yeah, no worries. So, obviously the valuation of the property that we are selling, which is 900,000, if I recall right. So that's pretty straightforward. It just says short form valuation is always required on the sale of the property, and it just also asks questions like, have the properties been listed in the market? So obviously you got to collect the client's contract between them and the real estate agent. So a few bits and pieces of documents just to make sure that it's happening. Yes, this is prior to formal approval, obtain evidence existing properties on the market. Obviously, yes, that's a yes or no. Yep, so I've just populated 2 here, which is pretty straightforward. The existing debt of the current property that they're selling and the valuation of the property, which is 900,000, saying yes to it. Then this is a bit of a tricky one, guys. Now, I made the mistake here. It says proposed loan amount. So I made the mistake by putting 1.2 mil, this amount. But when I speak to Bank of Melbourne, they said, no, look, this has to be the property value of the new purchase. It sounds a bit tricky, but the other lender said the same thing. I was like really puzzled, but then when I spoke to the other lenders, they said the same thing. No. The way we calculate, it's not the way you do, because I sent them these I've sent all of these to them and said, look, this is my scenario. Can you tell me how to do this? And they said, no, you're making the mistake, Marsh. Here, don't put that here. You just have to put the property value of the property you're buying. So that's 1.5 mil in this case. Yep, so just pop that in. You also pop that in here, right? So obviously you populate that. So it just says here, even though I think didn't read that properly, purchase price may be used for new property if policy permits refer to assigning residential security value policy. So I was a bit lazy to read that policy, but it just clearly says. Now on the Bank of Melbourne, guys, also they give you example here so that if you kind of get stuck, always you can refer back to what numbers you'll be populating in each of the cell, and you only have to populate these gray cells only. So that's the good thing. Now, if you're running house and land, so the construction, this sheet is the one to use. I haven't used it because this wasn't the construction. Basically, only difference is you got the land and the construction prices separated to be populated there. Yep, so we pop that in, the purchase value of the property. So it just shows the total valuation, the combination of these two. Now they're asking you to put in stamp duty, any other cost, any other additional expenses that the client would have to incur. So if I go back into my sheet again, I've just got this amount here, 83,050 plus. What about these two? Why isn't it coming? Yep. So my total is 88,967. Yep. So I'm just going to say 88,967 here. Then own funds of the client. They obviously have got 151,000 as their own deposits. Oops. What am I doing here? 151. So less own funds, 151. If there's any other selling cost, but of course the calculator automatically does that selling cost calculation as well. Now you just have to simply put those numbers, guys. So we put in the existing debt, the existing property estimate, and then you put the total contracted price of the property that they intend to buy, and other cost. If you put in what's your contribution from your savings, and yeah, that's pretty much it. This one I don't have anything to put in here. If you have any numbers there, maybe any other cost, you can populate that as well. Now, when you put that in, you will actually see where you are, which is pretty straightforward decision. You're pretty much looking at a peak debt of 86 LVR and end debt of 88. So it just saying if you're using for loans with end debt maximum is 90, yeah, we can. But then obviously now you got to check with the lender what's the sort of scenario that you'll be looking at, and just to make sure that the LVRs and, you know, whatever the fees that applicable at that point in time is the conversation you need to have if the client is happy to look at it, or if you want to go back and table this scenario to the client, everyone. So that's where we are. But if this goes below 80, it's definitely a good scenario, because then client is not paying any money in terms of LMIs. And then you'd also see your results here. So it's just the calculator says the ended amount, standard variable rate, and whatever the updated calculator. I think this is going at 6.38. Yeah, and then the other thing, the rates also differ, as you can see that. So they'll be also paying fairly a premium rate as well. So you see that numbers are getting populated. Now, when you submit the loans, you would obviously has to use this area. And in Toolbox, guys, you got to have two separate applications, but you got to make notes connecting the two, saying this is a bridging loan, because Toolbox does not have an option to populate a fully fledged bridging loan. So you got to do one like a refinance, the existing property, and then you got to do another one, but you got to link the two, and you'll have to have a chat with the lenders, broker support, or the BDMs in terms of what numbers and what values to be put in. So what I was told is basically to use these numbers when I'm populating it. So the total amount should be this one, but I didn't actually go in to put the loan, because obviously moment it went 80%, the client said, look, Marsh, you know, the moment it went over 80%, client said, look, Marsh, I don't think we're looking at, you know, sort of this scenario. We'll try and sort out ourselves, you know, by way of having some sort of a arrangement between the sale and the purchase. Yeah, so eventually they went ahead and they signed the contracts, the loan contracts for the new one. So that's pretty much it. A lot of them basically would ask you to populate these set of numbers. So that's not really difficult. And then obviously it's two applications, a little bit of work, obviously in Toolbox standpoint as well, in terms of making sure where you put what numbers. Yeah, so that's where it is. So now I didn't go into that level. So guys, hence I'm not in a position to tell you exactly what needs to be done. But it's just that one has to go as a refinance, and then obviously the other one has to go as a purchase. And then you need to speak to your chosen lenders, broker support teams, and make sure that the calculator is correct and what numbers you need to put in terms of for them to see that as a bridging loan, because we don't have the facility in Toolbox to sort of submit a bridging loan, because we can't use these numbers straight away in Toolbox as well. It'll actually give you errors in Apply Online. So I did try multiple options just as a trial, but it was giving multiple errors in Apply Online in terms of getting it through. Yeah, so hence there is a little bit of work to be done on that front. Yep, right up to Toolbox, I think I kind of got my head around in terms of how to do the calculation, at least just to take the customer and go and table the scenario and to see the customer's appetite. And then obviously if the customer says, yep, it's doable below 90%, and Marsh can come back and tell me how much of LMI that I have to pay. And obviously I would have gone back to Bank of Melbourne and asked them what the exact figures that the client will have to pay. And I would have gone back to the client. I think they did mention a figure. I can't remember how much of the LMI was just worked out to about 80,000 or something closer to that. So technically it was 240K bridging finance, but client wasn't happy to pay that 80 grand in terms of LMI fee. Yep, so that's pretty much what happened to me, and that's pretty much the story, guys. Any questions?
Peter's got a question. Hang on, in the chat. 2 apps opportunities, 1 peak debt, and then apply online has bridging box to
sorry,
tick.
Jim. So you generally, I've done a couple of bridging. You go peak debt, end debt,
Yep.
with your peak debt through apply online, Master's right. In Toolbox, you can't go easily on the bridging loan, so you do need the two. But in apply online, there is a function to tick a bridging loan for your peak debt scenario, and then you can link it through apply online as well as in Toolbox to the end debt scenario, so that it ends up with the same credit assessor and so on and so on.
Beautiful. Thanks, Pete.
Beautiful.
Appreciate that.
Excellent. Yeah, good one, Pete.
Andrew, can you send us a spreadsheet, please, Marsh?
Yeah, definitely, guys. I'll share it in our group so you guys can download and have a look, play around a little bit, yeah, and just get yourself a little bit of practice.
Cool, thank you. Nuns, did Elevate stop suspend their bridging loans?
Oh no, I had a chat with Jesus. He said, "Look, Marsh can do, but you got to get both the properties into." Everyone said the same thing, pretty much. Jesus said no at first because he said he asked me like, is this client the existing Elevate client? I said no, and then he said can't. I said like, what can we do? And he said, yeah, if you can convince the client to come with both the properties, then we can look at it. So same thing with HSBC, guys. They don't do bridging through broker channel, but you can send the client directly to one of their branches. They'll do it for you, but you don't get paid for it. But of course, in my case, because I got the first loan approved to HSBC, we're just trying to somehow push it through them. But then they said, look, we also have to have the other property, and then the whole story stopped there. Yes, it's just, I think the thumb rule is both the properties has to go to the same lender.
Yeah, awesome. Cool. Thank you, Marsh. I might stop the recording.
Cool.
I've got one last